Hey there, and welcome to Retirement Reimagined. I'm Tiffany Nyiri, Senior Living Specialist, and this is the podcast where we flip the script on senior living. Whether you're a retiree ready to take on a new adventure or just curious about how to make the most of your golden years, you're in the right place. Join me and our amazing expert guests as we dive into everything from hitting the road in an RV, getting your financial ducks in a row, exploring the perks of a reverse mortgage, or just figuring out how to link that smartphone to your car. We're here to inspire, inform, and give you practical tips to live your best retired life. So buckle up, tune in, and let's reimagine what retirement can truly be. Welcome to the podcast of Retirement Reimagined. And we have a very, very special guest today who is highly educated. And I am super excited she's taking time to be with us today because we are going to jump into a lot of really good things. And we're going to maybe mix things up a little bit and say some things that you guys are not used to hearing. So welcome, Kris Vann. Please share a little bit about your education and who you are and what you do.
Yeah. Well, first of all, Tiffany, thank you so much for having me. I have to say, I love geeking out on this topic with other real estate and finance people, experts like yourself. So thank you for inviting me to the discussion. So a little bit about my background. So I'm an attorney. I'm also a licensed real estate agent and a financial planner. And now I am a founder and CEO of a fintech startup called Ritual, Richuel. It's really all about helping people live a rich life with guided daily money habits. And so I've been doing that for the past couple decades. And I really just love helping people, guide and coach people to make the right financial decisions to live the best life that they can.
And I am of the same mindset as far as live your best life.
Yes.
And if you're not aware of some of the tools that can help you do that, we are going to put those tools in front of you.
Yes.
And some of these tools have a little bit of bad taste in your mouth. Some of these things may be from history, and we really want to bust some myths on those. We really want to get educated on some of these things that our 62 plus clientele could utilize if they would take the time and their financial planner to learn more about how it would help balance their retirement.
Yep. 100% agree. I think people need to learn about these other new options so much more. So I'm glad to be talking with you about that, Tiffany.
Good. Yeah, because I do so much training with just real estate agents in general to talk about how to leverage the equity in your home.
Yes. Huge opportunity.
It's huge. We talk about so many different things like future inheritance to your kids. Why not, if your kids don't currently own a home, and they're of age to own a home and they're ready, why not help them now while you're still on this beautiful earth?
Yeah, help them. And we're so equity rich right now. We'll get into that, but
we will.
Yeah. But as Americans, we are equity rich. I think the stats show that over 50% now of home owners with mortgages have more than 50% equity in their home values, which is a ton of money to tap. Anyway, so many opportunities there.
And majority of our homeowners are baby boomers.
Yes.
Because they were able to get into the market when it was lower. Like you could get into a home with a single person working in the family.
Yeah.
Let's not kid ourselves. It takes two people a lot of times to buy a house right now.
Yeah, especially in California.
Two incomes. Yes. So we are talking baby boomers are majority of the people with equity and home ownership, and their equity is kind of just hanging out.
Yeah. Yep. It's
not really doing anything.
Yeah. Yep.
Yes. So let's see. Attorney, licensed real estate agent, financial planner, and then the Ritual, which I love the play on words. So clever. So clever. So we'll try to get into that too. Or I may have to invite you back because you've got a lot going on, girl.
I love it.
So
I love talking with you, Tiffany. I love to come back. Yes.
So I think we're going to pull out a couple of the things you mentioned, and I love how you brought this up. The definition of retirement has changed.
Yes. Yep.
And talk to us a little bit what you're seeing.
Yes. Tiffany, you're right. So the past couple of years have been crazy, right? So much is happening.
A little different.
Yeah, I mean, the pandemic happened, thank goodness, where we came out on the other side. There's a lot of uncertainty. I think there's been a huge wake-up call to all of us across every generation, and we just can't take life for granted. And with that perspective, it means we really have to be very strategic about how we use our resources in order to live that rich life we all want in the time we have, right? And so the definition has gone a lot broader. It's now about freedom, but in a way that's very unique to every individual. So, we're not going to just go sacrifice, work our butts off for decades and just to make money to get rich and that's it. No, I mean, these last couple of years have really changed that. It's really now about time and using money for creation of time.
Yes.
To do the thing that we care most about, right? And that could mean taking mini retirements all along the way. So it's not just work and then retire. It's like work, mini retire, work, mini retire, work, and then all along for longer, or starting a new business or a career shift in midlife, which is exactly what I've done. I mean, you were smart to have started your company 24 years ago, but I'm finally launching my own. But a lot of people are doing that. People are continuing to work in things they absolutely love doing for as long as they can because there's purpose and meaning, right? So, like, for example, my husband's an educator. He's going to do exactly that. He loves his work, no desire to stop. That's great for me because more income, longer. But anyway, the bottom line is that retirement now has become very individualized in meaning for each of us. And so to make the right decisions, we need to get very, very clear, very, early on and define what that rich life means to each of us personally.
Yes. And you being a financial advisor, you talk to people about this. Like, that's the number one question. When do you want to retire? How much money do you think you're going to need? And where are we currently? What's going to be our income once we retire?
Yes.
So in talking about that, a lot of people hopefully have an estate planner, a trust attorney, and a financial advisor that manages their funds. Not many people have pensions anymore, but some of my clients have pensions, which is great, but they're not prevalent anymore. We're on our own, or we have a 401k.
Yep.
Is really, the traditional W-2 worker. And if you're self-employed, hopefully you're making your own.
Yeah, exactly.
Like you and I, we're making our own.
We're making our own. Yeah, which is great. I mean, there's so many tax advantages to that, right? So
yes.
But
yes. So we want to leverage talking about the equity in our home.
Yes.
It's not talked about because the mindset is pay off our house, pay off our house, pay off our house, and hang out. Well, Is that, as a financial advisor, is that always the best thing to do?
Right. So here's the thing. I mean, here's the truth. And I'm actually a financial planner. And I think it's important for people to understand financial planners are also advisors, right?
Okay.
And there's different types. When you have a CFP, certified financial planner, you are an objective flat fee planner, one-time planner, right? So you don't have that bias because you're helping to advise people rather than tied to their investments, right? So as you know this, because you've been doing this for so long in the financial world, traditionally, financial advisors are compensated based on a percentage of the investments that they manage, right? It's called assets under management, right? Mm-hmm. And it's great. Advisors help with your 401ks, your IRAs, stock market investments, which is a good thing, but they are not necessarily motivated to look at all the other newer options like real estate that are out there. That's just the truth. That's just the honest to goodness truth. But I think because luckily, I mean, look, as we have unique definitions of our rich lives, you have to use more creativity in navigating those decisions, right? And you have to go beyond just the traditional retirement approach. But luckily, there's so many options to consider. Like you said, tapping home equity. That is probably one of the biggest levers right now, because households are equity rich, especially the boomers, right? Boomers, Gen Xers are getting into this. Right now, about 50% of households with mortgaged home properties own more than 50% of their home value. That's a lot of money.
It's a lot.
So people now have a lot of options to tap that wealth, right? Like They can downsize. There are newer products like home equity investments that are out there. Reverse mortgages are
Let's
a
say the bad
huge.
word just to get the elephant in the room out. Come on.
I think that has been it got such a bad rep because people didn't understand it. It
It
was a
was
different,
abused. It
it
was
was
abused
abused.
back
It
in
was
the
a different
day.
product back in the day. Actually,
Oof.
I'd love to hear from you because you're the expert at this, but are you seeing more people take that approach? Because I think people need to be thinking about this.
Oh my gosh. Okay. So I'm watching the world open up to the world of reverse mortgages. I'm watching it. It's grassroots education, knowledge, getting your real estate agents involved, getting your financial advisors, your planners involved, getting
Yes.
them educated that this is not your grandmother's reverse mortgage. This is
Yes.
the modern day reverse mortgage.
It's
It's
so
been
different.
rehabbed. Yes, it's different. You can't just raise your hand and get one like you used to be able to. It was the wild, wild west.
Yeah.
They
Yeah.
let you pull a lot of your equity. The new one is extremely conservative,
Yeah.
very conservative.
And rightly so, right? I mean,
Yes.
it can be the right vehicle for the right people,
And
right?
keep in mind, it is not just for people that need it. I
Mm-hmm.
do more of mine are strategic than they are need based.
Mm-hmm. Yeah.
So the wealthier people understand that this is a strategy to utilize and leverage your equity right now
Yes.
because we're at such a high rate of equity that they can do other things with this money to make them more money.
Yeah.
It's
That's just smart. You
awesome.
can run the model, right? I mean, you can run the models and see. We're so lucky to have access to this, the folks that got in.
Mhm.
And hopefully the newer generations too at some point. But you can run the models and use that money and make more money. And there's so many other options out there. Right? You can take it to generate passive income through other real estate investing or other alternative investing. Now there's new platforms out there. Like you don't have to manage buy or manage your own properties. You can get on crowdfunding platforms like Fundrise or CrowdStreet and put money in and
So
have a
many.
team,
Yes.
manage properties for you. And so you're making double digits of, interest off of that. So I think, but it is about being smart, right? It's about educating yourself and being
Absolutely.
savvy about properly using it. You can't just, it's not just, without thought. It has to
No,
be
no,
straight.
no. And again, this is some of the clients absolutely need this. Maybe like a widower that just lost income in their
Yes.
household.
Yeah.
This loan will save you and
Yes.
allow you to stay in your home if that is what you want, or it will allow you to purchase home maybe closer to your children
Yeah.
where you don't
That's
have to
huge.
pay cash. You get
Right.
to utilize some of those funds, put them back under management, make more money that way. So a lot
Yeah.
of our listeners may be like, what are you guys talking about? And just break it down real quick. Reverse mortgages are awesome when they're done correctly.
When they're done correctly. Yes.
Okay.
Yes.
And we have an expert right here, attorney, real estate agent, financial planner, because these are the people that we will be communicating with on if this is something that you would like to do. Some of my clients want to talk to their money people and some don't. They understand it. But
Yeah.
you don't need this is not always a need-based loan, but when you do
Yes.
need it, it will
It's there.
absolutely help you live your best life and bridge the gap between maybe not having enough funds to do anything fun because you're making the house payment or you've got a roof going bad or you just lost income because you did lose a spouse. So this is a tool to be educated on. And
Yes.
again, the reverse mortgage is not a bad word.
Yeah, I almost want to call it something else,
I
right? Because
know
it's such a different thing now.
it's
And
such a different thing.
and I think it's important though, to your point, you really do need to make sure, okay, you thought about the nuance, the legal piece. Are you the right person for it? Is it
Mm-hmm.
and then I think all the different experts can help with that as well. But I do think there's so many regulatory stopgaps in place, right, to make sure it's not abused. So it is such a different product solution now. So anyway,
Very
but that
different. Yes.
I think it goes to your point, Tiffany. You've got to be creative now. And I mean, geo arbitrage is another, we're calling it geographic arbitrage, right? You mentioned like, oh, you can move away, right? And people are doing that. They're moving away from expensive cities and going to less expensive areas to be with grandkids, and maybe even internationally. My own mother moved to Jakarta, Indonesia, which is near Bali. I think people know about Bali. It's like this paradise. Right. So she moved from Washington, D.C. Her dollars go 10 times as far. And she just goes back and forth to California to be with us and the grandkids. So, I think that's another creative approach. So anyway, we're really lucky that we have all these options now. That wasn't the case in the past. But I think at the end of the day, the most important thing is we all have to just get clear. People have to get clear on your true freedom number. So that's not just some number that people tell you that you need, like you need X and X million just because. It's a real true assessment of what your expenses will be for the life that you want, that you've defined. I've actually just written an article about this called Own Your Freedom Number. I'd be happy to share
We
to your
will
audience.
put that link
helpful.
in this
Great.
podcast.
Because I think it's important for people to know, don't just go for this random number. You really need to be thoughtful about what kind of life you want, how you can leverage some of these options, like the reverse mortgage and your home equity into the scenario planning, right? And of course, you need to make sure to plan a cushion for things like long-term health care. There's a lot of uncertainty right now around Social Security, stock market volatility, and inflation, but those options like home equity can really help balance that out. So I think it's really important to be very strategic about thinking about your number.
Yes. And again, a lot of people are scared to even raise their hand. Please raise your hand. Just ask questions because, it doesn't cost any money to talk to me.
Right.
About reverses
and you
or
have so
home
much
equity.
information. Like you have so 24 years of knowledge on this. Yeah.
Yes. And I have partners just like Kris that if I want a scenario ran with a financial planner brain, then we're going to run it on that side so that this shows you how you can fill the gaps, because when the stock market drops, you don't want to be pulling money out of your assets under management.
Yeah.
Because instead of passing away at 95, you are now going to have to pass away at 85.
Right.
Because you've just taken too much money out in a down market.
Yeah. I can tell you my mother did that, and I wish I had been able to stop her at the time. And I think we all learned that lesson. It's a long-term play, right? It's a long-term play. You can't make knee-jerk reaction decisions. And money is emotional though. So that's why it's important to have a team of experts to help think through it strategically and to think through all the various options.
Well, and the traditional person that was a W-2 employee is not trained on how to manage money. And it's not a bad thing. That is not. You did your job. There are professionals that help you do this.
Yes.
So you don't have to know everything. You just have to find someone that is trustworthy to guide you, educate you, and go, hey, for your scenario, you have option A, B, and C.
Right.
And here's the pros and cons.
Right. Exactly. It's important. It is important for complex financial decision making to go to the real estate expert, the real estate lending expert, the people who know about money and the solutions out there, to go to the certified financial planner. But I think there's also the day-to-day. And that's also about leveraging platforms that can help put daily money habits in place. That's another thing I wanted to talk about.
Yes, let's do that, because day to day is tough for people with inflation and things like that. So please share.
Day to day is really tough. And that's why I think there are platforms, like you need the human experts that have done this for, a million years. But side by side, you need kind of the tech platforms that can help on a day to day.
Okay.
To help nudge you into these behavioral, better behavioral habits. So for example, there are apps out there, like there's something called Monarch Money. I love Monarch Money. I'm not affiliated with them or anything. I just love them. They automate budgeting. There are other automated budgeting platforms like them out there. There are investment platforms like Wealthfront and Betterment that do that. I used to be in that space. But I think the challenge in the US that we're facing is that, we face a lot of things that are kind of stacked against us, and we've kind of developed as a collective poor daily habits on physical and financial health, right? And I think we all struggle with that. And I want to dig into this because there's a big connection, I think, between health and financial health.
Please do.
And a lot of this, I think, is really preventable. And it's why I've built my company, Ritual, to solve this challenge. So, for example, on the physical front, the CDC says that there are about 42% of American adults who are overweight. They lack exercise, bad eating habits. I mean, there's so much good food out there. I could tell you I personally struggled with that. But, there's been an increase in diseases like diabetes and heart disease, right? Because of the poor habits. On the financial front, we struggle with overspending and lack of budgeting. And a lot of us are relying on high interest credit card debt, which goes to your point, like, hey, there's other options. You can tap other things like equity, right? Don't go there and use high interest debt. So, but in both instances, it's important to prevent because that leads to better outcomes. So like if you exercise and you have good nutrition, you have a strong body. If you plan and you have smart budgeting and tracking, and you have smart experts helping you guide to make those decisions, like it'll protect you from that economic uncertainty, right? But I think a lot of the problem is, we're bombarded by consumerism. Like go to Instagram, all those influencers out there, they're just like spend, rather than save. And to your point earlier, I mean, there's inconsistent education, right? Like not all of us got strong financial education growing up. And there's also human behavior. I mean, it's easier to prioritize immediate gratification over long-term thinking. And it can be really overwhelming because there's so much advice coming at us, right? So it's easier to procrastinate.
Well, and it's just not fun. Being on a budget, no one wants to be on a budget. It's not fun.
It's not fun, which is exactly, I'm so glad you mentioned that, Tiffany, because it's not fun to exercise sometimes, and it's not fun to be on a budget. But, that's exactly what my team is helping to solve. So the first thing is these tools need to help make it more fun. I mean, they've got to help us celebrate the wins like every day, right?
Yes.
Like, hey, I just saved whatever. I decided to shift by getting a cup of coffee with a good friend rather than a, $300 dinner or whatever it is. So having little behavioral daily habits, you get the same great things, but you're being smart about how you use your money. So first, it needs to be more fun. Second, it needs to be less painful, right? So it's got to simplify that financial action. It's got to educate us gradually with little nudges and bite-sized education, because none of us have time to inhale 3 hours of information. And then we also need supportive communities to be talking like this. Like it's kind of taboo in America to talk about money, right?
So much of the children of my seniors that I talk to say, my parents never talked about money. I don't know if they have a will. I don't know if they have a trust. They won't talk to me.
Yes.
I don't know anything about their bank accounts. And then the parents pass away and it's messy, or we're in probate.
Yes, that's so preventable, right? The whole probate thing. It's so preventable. If we could just have supportive communities talk about this, share how we're all managing money better and help each other, right? So anyway, there are platforms like this out there in the physical health world. Have you heard of a platform called Noom?
Yes.
Oh my gosh. I love Noom. I love Noom. And it really has helped so many people lose weight, build fitness, right? I mean, there are 45 million users worldwide on this thing. And now our company Ritual is building a platform like Noom, but for daily financial habits. So to make what you're saying, like, make it more fun, like you said. So I'm excited to say we're launching a mobile app in early 2025, and we'd love to invite your audience into this for free. So it's launching next year. But yeah, we're excited about it because our goal is really just to make good daily money habits easier, more fun for people.
That technology is very, very helpful when you break it down into bite-sized pieces like you're doing.
Exactly.
So
when it's not
kudos
overwhelming.
to you. Beautiful.
Thank you,
Beautiful. Love
we need
that.
it.
Because again, let's live our best life, but
Yes.
let's be smart about it. Let's be strategic about it. And I love the analogy you just did. If you want some friend time, go have coffee, because you don't need to go to a restaurant and have cocktails, appetizer, dinner, dessert,
No.
$300 later.
Yeah. Yeah. You could go on a walk or a hike and, enjoy being outside and take that $300, invest it. And, 300 adds up, 300 a day adds up.
Compound effect.
Compound.
Woo! So, and yes, they do say walking side by side is the best way to communicate and have a discussion, especially a difficult discussion. So get out there and walk, everybody.
Yeah. Financial health and physical health all in one.
Yes. Yes. So we have Noom and then we have ritual.
Yeah, exactly.
Love it. Love it.
Yeah.
Okay, let me read a couple more about I think you went into a lot of this. It's so good. Let's talk about procrastination.
Yes.
Because when you plan on retiring, let's figure out a plan at that point, not when you're 80.
Yes.
Okay? Because there are super amazing, fun things that you can do at 62.
Yeah.
That will put you on the path of having more options. The longer you let some money sit in this account, the reverse mortgage has a beautiful line of credit option that has a growth factor.
Yeah.
You don't have to do anything with it. Just let it grow.
Yes. I mean, this is fun stuff, people.
It's fun stuff.
And it should be talked about early, like, early 60s, 50s, if you can, like start talking about it. Right. But like it's in your early 60s, like this is fun stuff. Like if you are, luckily a lot of the boomers, like I'm a Gen Xer. And so, some of us got into the home equity position. We're very lucky.
We're very lucky. This I'm 51.
Yes.
When I'm 62, my plan is to put a reverse line of credit on my home.
Yes.
And let it sit there until my financial guy tells me, hey, Tiff, don't pull money out from me this month. Pull money from your line of credit so that you can live to 95 years old.
Yes, I know.
Because he and I are on the same page.
That's awesome. Yes.
And yes.
I'm 51 too, Tiffany, and I will be talking to you about that pretty soon because I plan to do the same thing. Because, I want to be living a long, high quality life.
High quality.
I want to use all those options that I got.
And I want to do it while my body is still there and I can still pick up my suitcase and I can still get on an airplane and I can still, my whole gig is traveling, like Indonesia with your mom.
Yes.
I'm talking Thailand. Like I can live in Thailand.
I love Thailand. Yes.
I could absolutely live in Thailand. Not a problem.
Yep. Absolutely. So fun.
Mm-hmm. So the international travel, but also let's say you want to live in the States.
Yes.
And it's just for fun. Let's go over a scenario that we did the other day. Husband and wife have a 2-story home. They want to sell it. Mm-hmm. And they're going to net about $500,000 once everything's done. Mm-hmm. Well, they want to pay cash. Well, in our city, you can't buy a house for $500,000. Right. So they are going to go what I would call the desert community, and they were going to pay cash. Well, their kids still live in our community, So once they learned about the tool and realized they didn't have to pay cash for the home, they could get a reverse mortgage for purchase. They can now buy an $800,000 house, stay next to the grandkids, and have the same benefits. They're responsible for taxes, insurance, and HOA.
Right.
But now they don't have to move 2 hours away from their grandkids.
Yeah, they get to be with the most important people.
The most important people. And that's their idea of retirement. That's their idea of freedom, to be able to babysit and take them to Disney and do all these fun things.
Yep.
They don't want to travel. They want to be grandparents.
Right.
But moving them to,
Active.
active, and moving 2 hours away from the kids wasn't going to be fun at all.
Yeah. Yeah.
So again, had they not known this tool, or their real estate agent didn't know this tool, I
Yeah,
can't even imagine.
that's the thing is that's why like everyone's rich life is different, right? And
Yes.
for them, they want to be highly active on a day-to-day basis with their
Yes.
grandkids. And a lot of people want that. And that's why you do have to look at all the different options and use the tools in the right way and be educated about how they work
Yes.
so you can leverage them, right? But I think it does start with knowing like what kind of life do I want? And
Oh
then
yeah.
not being like, oh, well, I can't have that. No, you can have it. And you need to open your eyes to see and be
Dream big.
right
Yeah.
and be proactive and learn about how that can, what can help you get that life.
Mm-hmm.
I don't think enough people do it. And I think it's because of the whole financial industry kind of being very traditional in the way they approach things. And so, but I think people are waking up to that. I think they're seeing there are newer options. I think there's a lot of myth busting out there
We
now.
are busting this every day, and I
Yeah.
enjoy it. I love educating and letting people know, again, it is not your grandmother's loan.
Yes.
It's just not. Totally different. We have counseling, we have hard stops, we have guidelines,
Yeah.
but we also have so many options. So
Yeah.
many options to supplement your current income.
Right. I think it got a bad rep because, I mean, the big kind of legal thing is that you have to be able to just make sure you're paying the insurance, right, and the taxes, right? I mean, that's the big thing, right? But
Mm-hmm.
most people who are in this position, who have that kind of home equity are able to do that. I think what happened in the past was people who were getting into these things were not prepared, right? Wasn't that kind of the big thing? And now that's not the case at all. I think that's the big difference. Is that right, Tiffany? I mean, you're the pro on this.
Well, and no, you hit on a couple different things. So let's just give a scenario. Say you have a spouse, gentleman, that's 70, and you
Yeah.
have a wife, 65.
Right.
These loans are all about age. The algorithm does age just like life insurance. So previous reverse mortgages didn't have guidelines in place. So the spouse that's 70 would take the 65 off the loan completely. Bye bye. Which means when spouse passed, that loan was due and payable, which means the surviving spouse, the younger woman in
Yeah.
this instance,
Yeah.
had no home.
Oh my gosh.
She got the pink letter that says you need to move
Oh my gosh.
because we need to sell your house or you need to pay off X amount of dollars. Well, that's not really cool when you're grieving your spouse.
Yeah, that's awful.
And the
Yeah.
kids don't like it either because now they have to deal with all of this because they literally took the spouse off the loan.
Yeah.
It's almost impossible to do right now. The
Yeah.
guidelines are, it's almost impossible to do
Yeah.
if there is a spouse.
Right.
So,
Yeah.
boom, that myth gone.
Gone.
Or that situation of using the loan in the wrong way. They were
Right.
manipulating the loan to get more money. Okay.
Yep.
Bad idea. And then, of course, not paying your taxes and insurance. Sometimes the family forgets. Maybe mom and dad aren't very good at paying their bills anymore because they're getting up there.
Yeah.
And the family may not have stepped in quick enough.
Right. Right.
So, of course, there's always communication. All you have to do is call the servicer and be like, hey, I'm taking over the bills now. We're going to get those taxes paid
That's all
for
it
you.
is. It's so preventable, right? It's communication. Now
All
there's
it is.
AI technology that automates that, right? You just set it and forget it now. So that stuff just goes away.
Yes. So you are not allowed to abuse this loan anymore. You
Yeah.
go through counseling. You must do counseling. It's a
Oh, that's
requirement of all of these loans.
yeah.
So, and it's a third party. I educate, and then the counselor makes sure that I educated you properly.
Yeah. Yeah. That's it's great. The regulatory environment has done the thing that they needed to do, right?
Yes, and they're not letting you utilize all of your equity. Again, it's very conservative in a good way.
Yes.
So for instance, like a 75-year-old person may be able to pull not even 50% out of their home if it's paid for.
Yeah. 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 Yeah.
So that means you
Makes
still have
sense.
50% of your equity.
Yeah.
to complete your lifespan.
Yeah. That's
which is
still
great.
a chunk of change. That's a lot of money.
Yeah. Yes. And if you utilize the line of credit correctly, and we're not talking a regular line of credit like a HELOC, everyone. We're talking one that can never be frozen and it grows. Like, I could talk about this stuff all day long because I'm just so passionate about it. And it's really cool tools. And, you know, this is where I am right now, just full blown education mode.
That's great. You're seeing an uptick, it sounds like. That's great. People are starting to see it. That's great.
One of the realtors that I speak to in Northern California just put me with someone today that wants to learn more. And I don't work with this woman on normal loans, just reverse mortgages. So it's coming around. It's coming around. And again, if you have questions about it, just reach out. It's painless. It's painless. And you're going to learn something, even if it's not for you. What if it is for someone that you met at your church that's struggling? You can then guide them in something that you just got educated on. So don't discount it just because it's not for you. You need to share the tool with someone else.
Yeah. I think more real estate agents need to know about it too.
Oh, you'd be surprised how many don't know that you can purchase a home under the umbrella of reverse.
Yeah.
And I teach all about that.
That's a great opportunity for real estate agents to really help their clients, right? It's another tool to bring to really help people.
Well, because there's a whole underserved market of people that are 62 plus, maybe in a 2-story home, that don't have their hand raised because they don't think they can go anywhere.
Yeah.
And that's a shame.
They just don't know that they've got options. Yeah.
And it's a shame. They just need a little bit of education from someone that goes, hey, what do you want?
Yeah. Right. What do you want?
Again,
what do you want in your life? Like, you don't have to settle.
You don't have to settle.
You should define what you want in your life. You have one life. Make it awesome.
Make it awesome.
Make it the way you want it.
Yes. And everybody that we're speaking to on this podcast has worked probably since they're about 14 years old.
Oh, yeah.
I'm guessing.
I can say I'm part of that crew.
Yes. And because that's just what you did.
Yes.
You started work about 14 years old and you just worked and worked and worked. And you paid your house down and you paid your bills and you were a good citizen and you did everything right. And now you're like, going to the grocery store sucks. Everything's so expensive. I can't go with my girlfriends on their cruise because I can't afford the cruise. You know what? Stop saying no to your girlfriends. Raise your hand. Let's get you going. Let's figure out how to let you live your best life.
Yes. Yeah. Exactly. Yeah.
One life.
I mean, and again, like we were talking about, it's like, we really got a wake up call these last couple of years. Like, you really need to define it. Like, you can't just let it happen. You really have to proactively define it and then proactively find options to make it happen.
Yes. Yes.
Anyway.
Okay. So let's see. Did we get all of our questions, freedom and retirement? Yes, we did.
Yeah.
We're going to put Kris's links, LinkedIn, Medium, Instagram, the link that you wrote the article.
Yes.
Also, the free app, is it going to be free all the time, or is this an intro, or how's this going to work?
Right now it's for early access people. So anyone who signs up for early access will get it free for a period of time.
Okay.
But right now we just want to get it out there to help people start building good daily money habits. And so the more people we can get on it, the better we can, continually make it the best platform we can to help people.
And this platform is for all ages.
All ages.
Okay.
You don't want, this is just like Noom. I mean, Noom was really smart, right? Everyone struggles with daily physical
intake, food,
exercise, and diet and nutrition habits. All of us. There's not a single age that isn't touched by that, right? And so they were really smart. It didn't matter, male, female, anyone who wants to get stronger. Okay. That was their whole thing. And similarly, that's who we want to work with. Like, anyone who wants to get financially stronger.
Okay.
That's who this is for.
Good. Good, good, good. Is there something I missed that you would like to talk about?
No, I think we got through everything, Tiffany. I really enjoyed this discussion. I think you and I are very like-minded. So, I
Yes.
really appreciate that.
Yes, and I did too. And we'll have you on because we want to learn more about how the app is going once you launch it next
Oh, yeah.
year. So we're probably going to do a check-in, maybe end of first quarter, and see
Okay,
how we're doing.
great.
Yeah, I
Sounds
think that'll be
good.
fun. Also, if anyone does sign up, well, you're going to, for the app and it's spelled a little bit different. I'm going to spell it for you.
Yep, it's RICH. So
Yes.
rich, right?
Yeah.
Rich Uel, RICHUEL.com.
Yes. Thank you.
Yes.
Everybody go sign up for that because again, end of third quarter, we're going to do a recap on it. And if you have questions or if you have some wins that you would like to share,
Would
we would
love that.
love to, yeah, we would love to hear wins. Of course, we're here for struggles if you have struggles too. Yeah, we're going to revisit this and have a little bit of fun. But
That's
thank
great.
you, Chris.
Thank you
Thank
so
you for
much.
taking your time and your
Thank you,
knowledge and
Tiffany.
everything. So everyone, you can watch Kris. We're going to itemize a couple things for you as far as where you can find her and hire her for services. Okay.
Yep.
Thank you everyone for
Thank
listening.
you,
You have a
Tiffany.
beautiful day. Thanks for tuning in to Retirement Reimagined. I hope today's episode gave you some great tips to elevate your retirement. If you enjoyed the show, be sure to subscribe so you never miss an episode. And if you found our discussion helpful, please leave a review. It helps others find the podcast too. Curious about how to unlock new financial opportunities in retirement? I'd love to chat and explore how we can make your golden years even brighter. Until next time, I'm Tiffany Nyiri. Keep reimagining.